being here. I love these Saturday events, kind of kick back. We can look at all the different charts, take questions, look for different trade ideas. So we're going to dive in today how to identify and trade market tops and bottoms. So the trading tools and tactics that I use to identify these tops or bottoms are what we call cycles, cycle highs and lows, and the reversal points, and how to pick those points, etc. So that's what we're going to focus here on today. So I'm going to kind of take you through the process that I use and show you how it's done. So a little background on myself. I've been actively trading for, I hate to say it now, over 40 years, and started my trading career back in the 80s on the oil side of things, trading crude oil, a company called Coastal Corporation out of Houston. Anyway, they had a training program that actually train you or teach you how to trade oil, which was pretty fantastic. So was able to get in that group right out of college, and started my career and never looked back. Sent me out to Singapore for a couple of years. That's what I was just talking about, and traded products and crude and all kinds of great things out there, and ate a lot of food. So great experience. Then in the mid 80s, went to a company called Transworld Oil. At the time, they were the largest oil trading company in the world. Transworld, Mark Rich, Fibro were the three biggies. And so spent about 17 years there with Transworld, and then ended up in their Bermuda office, which is their headquarters, and lived there for 15 years, ran the trading group, international trading desk there for over 10. And that's where kind of really, got everything, the experience that I really gained, because we were in so many different markets, not only in the oil side, but also on the, Forex, foreign exchange, all the different futures markets. So it was a fantastic experience. And that's where I started trading options, et cetera. But the thing that really caught my attention back then were, market cycles. We were always looking for the macro trend, our cycle, and then we would try to, catch that wave. So that's what, I've been obsessed with, the cycles and then options ever since I started my trading journey. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Now, trading is a never-ending journey of learning to expand your trading knowledge and skills. And what I've learned based on my 4-decade trading journey is that to become a better, more profitable trader, you need to be able to read the charts, understand the technicals, and then manage your trading risk. Now, fundamental analysis is important and helpful because it can really lead us to some great companies with good potential growth. But think about it, when it's all said and done, we make our money on the stock price, not the company. So that's what we need to focus on, is stock price, or price and direction and cycles. So that's what we're going to talk about. Now, how do we achieve this kind of trading success that we're looking for? First off, what you want to do is, define what makes a successful trade for you. So go back and look at all the trades that you've done, the ones that are successful, plus the ones that are, not successful or losers, and then try to dissect and break those trades down and find out why they were successful. Pick out the points that you did right, write those down, and that turns into a process. So that's what I've done. So you want to then do that, analyze your successful trades, then create the steps involved in doing that, and then have the trading discipline to follow those steps for each and every trade over and over and over. So this is where a lot of traders miss out. So you can get the steps together, but a lot of traders deviate off of following that discipline and those steps, and they start trading from seat of the pants, emotions, that thing. So if you can make it systematic, you're going to be much better off. So systematic directional trading process is what I put together. So first step is you want to plan in your trades. So it's very important to, again, dissect those trades, plan your trades, and then follow those steps. So the 10-step guideline I put together, these are kind of some basic things I always look for finding good trades. So first, find trade opportunities that are going to be based on, I'll look at the macro trends, I'll look at seasonality, and then industry specific, what's moving within different sectors. Then scan, I use a scan. I have a database of stocks and ETFs that I'm constantly looking at over and over, and I'll show you a couple of those different scans here today. So I'm going to scan the database looking for specific chart patterns, things that I like, which we'll talk about. Three, check the charts. Okay, so I have 5 selective, what I call high winning chart patterns that I look for. And this makes it easier for me to define the kind of trade because these patterns repeat over and over and over. The next step is you want to then validate your strength of the stock or ETF that you're looking at. You want to look at the relative strength. And to do this, I base it on what we call momentum flows and also the relative strength of the market sector that that specific stock is in. So then evaluate the current market condition. Now markets are always, there's always uncertainty, right? Because every week now we've got so many different, numbers and economic things that come out. So there's always the uncertainty. So you want to quantify that and put yourself into, are we in a low or a high or an extreme market of uncertainty? So quantify that, and that also tells you how to trade, because obviously if you're in extreme uncertainty, you want to really lower the risk as much as possible and defend your trades accordingly. So it helps you to plan your trade there. Then you want to establish the profit targets. So always have your targets before you ever put the trade on. These are things you're going to do. So establish your profit targets. And there are a number of ways that I do this, and we'll talk about that here as well. Then you want to establish, again, your trigger points for your stop loss and your trigger points that would use for trade defense. So you have your profit targets set, where you're going to go, take your profit at X and Y and Z. And then if it hits your trigger point for your stop loss, that gives you, your potential stop out. So you're not going to lose the full value of your trade. And then what I call the trigger points for trade defense, because the trades that I use, they're always going to be using some kind of option or option spread, so we can defend those trades. And I have trigger points then that say, okay, let's start defending. And then finally, you get to place the trade and then manage the trade. So these are kind of the basic steps you should kind of follow through on each and every trade that you're taking. Now, the next thing is you can't trade blind, okay? So to trade market cycle swings, you need trading tools that can identify these market cycle turning points. So I always, I've recommended a trading model or system where the trading rules are based on a repeatable, successful trading process that clearly defines and makes it easier to implement your trades. So when you look at different trading systems, a really great trading system should be one that you can use and be adapted to use across all major asset classes. So you could trade it for gold, silver, oil, gasoline, natural gas, ETFs, crude, stocks, foreign exchange, whatever. And you should be able to use the same system on any type of time frame, short term, intermediate, or long term. So that's the kind of model that I put together after years and years of trying different things, research, and spent a lot of money on different tools. So what we're going to kind of go through today is a system that I put together back actually in 2009. It's basically the same one I've been using ever since. So, a few new tweaks, but the same basic core foundation of the system. So when you trade market cycles in any market environment, that's what I did. I designed and used a rule-based system that I put together. And so the system design is based on these 5 high-winning chart patterns, a directional cycle timing model. That's the key core model that I developed back in 2009 and continue to use. Price range extensions. Okay, this is where we look for very, very extended prices up or down, where there's always going to be mean reversion. Markets never go straight up or straight down. So, for example, probably everybody here knows, but if you look at just a typical market cycle, what you're looking for is just basically what I look for is those turning points, right? So obsessed with that. And that's the key. When you break down your winning trades, it's all going to come down to one is direction. Okay, so that's one common denominator. 2, timing. And then 3, risk management. Okay, so this is what basically I've put together and figured out, okay, looking at all the different trades that I've done over the years, what made a winning trade? Well, it all comes back to you got the direction right, and your timing of your entries and exits was right, And then you have good risk management, which is great with options. So when we're trading cycles, for example, in a downtrend, currently in a downtrend, we're looking at, it's not going to go straight down, right? So market cycles, it might go down to the bottom of the channel, turn back up, come up here, turn back down, go back up. So we want to be able to time these turning points, these cycles. Okay, so to either go short, to either cover the short, go long, etc. That's what we're looking for each and every trade. And so we want to capture that kind of magic from that kind of dissecting those the various things we're looking for. So look for these cycle extensions that tell us when markets might start getting exhausted from the buying or selling. And then overbought, oversold cycles are very important to see when a market is getting way extremely overbought or oversold. And then those momentum flows is kind of the core of the model, which tells us potential direction based on these momentum flows. And then breaking down using multiple time frames, and then automated trend lines, which are basically moving averages, and then Fibonacci support resistance, to establish your targets for either profit or stop loss or trigger points. So by using this kind of rule-based system, this is really sets the guidelines for the trades that I'm looking for, and allows what I call the trades to come to you. So you don't want to chase trades. You want to look for specific things that you've noticed that make a winning trade, and look for those points. And then once you see that happen, that allows you what I call the trade to come to you. So whatever model that you're using, again, know the guidelines and rules and stick to them and use them, with discipline. So the end result of using a trading system is that you're going to make your trading entry and exit decisions based on your model, the trading model you're using. So not the emotions of fear and greed, and that's what sabotages all your trading results. So you want to always try to get your emotions out as much as you can, and that's what the system does for you. You follow those rules. And not every trade is going to be a winner, but if you put together a good system that's really high probability of winning, that helps you to eliminate just guessing the market, and trade FOMO, fear of missing out, or fear of stopping out, or things like that, or over trading, greed, etc. So take those emotions out, and you're going to have a lot better success. Now, step 2 is the cycle timing model. Okay, so the core model that I put together, started back in 2009, is centered around momentum. So trading any type of market environment is all about, again, price direction, timing, and managing your risk. And the best trading tools for signaling price direction and market timing are based on momentum flows. So momentum flows or momentum indicators, what they are, these indicators will measure the price strength or the weakness of price when measured across multiple time frames. So we want to look at multiple time frames and not one, and that's going to help us to identify these kind of turning points. So what this does, it creates a dynamic trend following indicator that you can use to help to identify a new price trend before it happens, before the herd jumps in, so you can see it early, so you can catch it before everybody else. It's going to also then validate the strength or weakness of a potential trend. So if you've got a really nice bottoming trend and a lot of different momentum indicators firing, that can signal, okay, good strength and momentum, makes you more confident with the trade, and you jump all over it. And then that leads to helping you keep in the trend longer to maximize your profit. So that's what I've found by using momentums. It really gives me clarity as to potential direction of price. So most people that I've seen, or most traders, they're not using these types of indicators. And what happens is that you're just taking a guess. Okay, I think it's gone down too much. I think I'll jump in. It can't go any lower. But what I found is when you have a system to back that up, your decision, and say, okay, you think it can't go any lower, and your momentum indicators are showing positive strength up, that gives you the confidence to say, yeah, this looks like a really good bottom, or yeah, that looks like a really good potential top. So that's what you want to look for, confidence in your trading, and that's what these kind of tools will do for you. Now, the next step is huge. This is the trading edge, or timing. So direction and timing, edge, okay? So what is timing edge? So by incorporating, again, and using multiple time frames, or what we call fractal analysis, this is going to provide clarity to the overall trend, and this can be used for your swing trades or used for your day trades. So the longer, basically the way you look at it is the longer term time frame that allows you to see the bigger picture. Okay, you want to follow the trend, the big picture. So I call this kind of the anchor trend. So you want to see that big picture first. Are we in a downtrend? Are we in an uptrend? So I use different time frames to look at that and do that in order to get an idea of the general trend that's going to maybe exist or that exists. Now then, what we want to do is we want to align and use the shorter time frame to help us plot the actual trade entry into the general trend. And these shorter term time frames should be aligned with that general trend to show trend strength or weakness. So let's say we're in a downtrend or whatever, or an uptrend. Let's say we're in a downtrend. The general trend is down. We want to try to align to get back into that general trend. Now, if we're down at the bottom of the channel, we don't want to go short there, right? So we want to, look at our timing to time it when we get back up to the top of some type of channel, which can be, different things we can use as far as a definition of a retracement areas to go to, and we'll talk about that in a few minutes. So very, very important for your timing edge is to do that. Now, what I've found that really has helped me over the years is when I put together the best, what I call the best high winning probability trade setups. And so these are going to be based on chart patterns. So again, I wanted to have everything kind of systematic. And so part of the system is looking for these specific patterns. And some tell you, become really, really fantastic trade patterns to get into. Now, the patterns that I look for is one, what we call the volatility compression squeeze breakout pattern. Now, this particular pattern is really dynamic because it's very powerful, which we'll go through. Now, this specific pattern can also be found in all these other 4 type patterns that I'll take you through. So we've got the volatility squeeze, which could be inside what we call the cycle high reversal. That's one pattern. And then we have a pattern called the cycle low reversal, and then a cycle low retracement reversal and a cycle high retracement reversal. So those are the kind of the defined patterns that I'm looking for the trade selection. So again, it's one of the steps. So the volatility squeeze breakout, let's take a look. What is that? What does that mean? Now, the volatility, what I call a compression squeeze pattern, is one that is identified as a period of price consolidation, where price starts kind of churning sideways and coiling in a tight pattern, and then as it has an explosive momentum breakout either up or down. So again, remember, cycles and price do not go straight up or down. They'll have a big surge, maybe up or down, but then they'll kind of cycle sideways. And this is kind of potentially that pattern, the coiling part of that pattern. Now, when you have a security that has multiple time frames in this volatility squeeze, that can present a breakout that has very, very powerful or more powerful follow through to the upside. So kind of like a chain reaction explosion or kind of lightning in the bottle if you capture that same trade setup. So, you have the one lower time frame. It could be a 30-minute triggers of hourly triggers 4-hour, that triggers a daily, et cetera. And now you've got a kind of a wave of this momentum. So it's this kind of chain reaction set off by the lower time frame of a volatility squeeze that can really ignite the higher time frames. And this is kind of really great and fantastic for either your swing trades or day trades. So giving you that big timing edge. And again, remember in trading, time equals risk. So the faster you're in and out of a trade, the less risk you're going to have. So that's what this pattern really creates a great dynamic for that. So this is kind of a visual, kind of what it looks like typically, what I'm looking for. So you can see this kind of range here. You can see this is actually Apple, and it's just coiling here, just churning, doing nothing, right? Now, it's not going to stay there forever and coil forever. Eventually, it's going to either break up or it's going to break down. So the next question is, okay, which way is it going to go, up or down? That's where we're going to use momentum. But the first thing is to identify the pattern, okay? So I've coded this into my system, and when you see these kind of dots, that's telling me on my indicator, okay, this, whatever you're looking at, is entered into a volatility squeeze pattern based on the rules that I've programmed for the pattern. And these are color coded to show you momentum either down or up. And then the next thing we do is, okay, which way is going to break? So typically what I'll usually do is what I call the momentum. I'll look at the momentum for that, and then we'll look at a break of prior highs, like a trend break here. See these breaking that trend line there, and that becomes your kind of what I call price execution or trigger point. But the next thing we want to do is momentum, and that's what we'll look at next. Is momentum going to give us a probability of this breaking up or breaking down? That's how we can tell using momentum. So here's a really good one example. This is Netflix. And so this one chart kind of shows you this pattern, and it happens over and over and over. This is Netflix on a daily. So you can see here, if you can see those dots, that green dots right there, when those show up, that's indicating the squeeze. See how tight that price is? And then what does it do? It breaks up. Now, how do we know which direction? That's where we don't always know, right? There's no, there's no guarantee. But what I've found is by using momentum, this gives you the high probability of direction. So below here, this is called cycle 1, lower steady 1, and cycle lower steady 2. And these are momentum measurements. The cycle 1 is very fast momentum measurement. 2 is slower to confirm. So you can see these two are aligned together. They're both up above 0. And which way does the market go? It goes up. It doesn't go down. All right. So then the next step is how far out, and that's where we do our target analysis. So there's an example there. Now here's another one. See the dots right there? Look at how tight that is. This is a daily. And then the momentum pointing up triggers up. Now here's another one. Where's momentum? Up. Okay. So that's just a really good visual of what this pattern looks like that we're trying to, to pick out. Now the next pattern is what I call the cycle high reversal. This is where you have a pattern that's prices above all the key, what I call look at moving averages. So it's really cycling high. There's nothing above it as far as any resistance. It's above all resistance. Now when this happens, it's harder to pick tops, but this indicator that I put together and use is really excellent and very, very accurate into defining where we have a top to a market or a bottom. And it's what I call, in this example, buying exhaustion. So here's QQQ. This is cycle high reversal using a weekly long-term chart. And so you can see this indicator here. What it does is it shows you these range bands that are based on average true range. So when it gets up to this white one here, that's really extended and very what I call stretched, okay, from the moving average here of a 20-period moving average like that. So kind of mean reversion. So typically what happens is you get too stretched. You get what I call buying exhaustion. You finally run out of buyers. And when we get the reversal indicator down here below, crossing that white line, crossing the moving average of it, that gives us a great signal to say, okay, this thing is topped out for right now, which doesn't mean it's going to go straight down. It could churn sideways, to work off some of that overbought extension. But typically, it'll have a mean reversion, typically back to a 20-period moving average. Okay, so that was one very defined right there, and very, very overbought. The other thing I look at is the overbought conditions. So this is based on a 90 percentile overbought measurement that I look for. So you can see this blue line is 90 percentile. So you can see this indicator's above the 90 percentile overbought, very stretched. Here's another example. This was back on the November 22nd of last year. Very, very stretched here, again, back up to that top ATR. And then we had the reversal here. And this one is what set off the market downtrend that we're currently in. So that's a really key, one chart pattern that I really look for in that situation. Here's crude oil. You can see fantastic trend up, and here it came into trouble. This got into, this is a daily, and it was up to like a 2 ATR here, and then overextended, and then you see the indicator below is what signals the potential change in cycle right there. So that arrow there also kind of is aligned with that indicator to point down. Okay, so then that's what I call the cycle high reversal. That was on crude oil. So this works on anything that you want to look at. If we have time, we can look at anything you would like. Now the next one is the cycle high retracement reversal. So this is where you retrace into, you know, you've got a downtrend going on, and then the market bounces back up and goes into key areas of resistance, which can be defined and identified using either, you know, moving averages, price action support, or Fibonacci. So here's an example of one where we had QQQ on a weekly right here, moving into, had the big sell-off, which started right there, came down, nothing goes straight down, right? Then it's going to cycle back up. So this is cycling back up here to that line there. That's a 50-period moving average. So big, huge overhead resistance or automated trend line that it's bouncing into. Now the chart here on the left is a daily lower time frame. So you can see here, the momentum is now shifting back down. So that's telling me that this is going to run out of juice into this key area of moving average resistance. And that's the perfect place to reset a short if you're, you know, wanting to short the market. And then it goes and retraces straight back down. So that's a retracement reversal. Here's another one, it's XLE. Here's a cycle high retracement reversal into weekly long-term, big, huge moving average right there, and just, you know, there's not enough momentum to push it higher. And here's a reversal down, you can see the arrow. Now here's a cycle low reversal. So this is where price has, you know, gone down hard below all the key areas of moving average support. And so that's kind of currently where we are at present. So here's QQQ, and this is a cycle low reversal actually on the weekly. So I call the weekly the long term. So we got a longer term cycle reversal for QQQ, the NASDAQ 100. Now you can see here, we had this big, where it started selling off back in the early part of this year. So here's the first one, November, and then it churned sideways, and then finally started breaking down lower. Then here we had that reversal up that I just showed you right here. Failed, came back down, had another retracement up here, but smaller. And then now we're retracing back up. We've got a longer term reversal here. Now, what we're looking at now, there's always a, you know, trouble points to any market. So the next thing that I'm looking for is these key areas of, you know, upper hand resistance that we're going to be going into. So currently QQQ is up about 16%, and this is a retracement of a prior reversal, which was right here. So this measurement from this low back in March to the high, that was a 16% move up. This is currently, we're right now at 16% again. So we're going to either, you know, potentially fail here, or the next level is right here about 334, 335, 40. This would be about a 20%, and up here to this moving average here, 340 to 350, this would be a 30% retracement up or down. So we're still at a lot of areas here to be aware of for this market, but this longer term cycle has shifted back up. Now, when we look at, I'll show you in a minute, we're still in what I call a macro downtrend. So I define markets using either the monthly, that equals what I call the macro, okay? And then I use the weekly time frame, which is what I call the long term, and then the daily, what I call the medium term. So the weekly and the medium term are cycling back up, but we're still in a downtrend based on the macro, which can stay for quite a while. So I'll go through that with you in a second. So here's a cycle retracement reversal. So here's where you come down to a key support of the moving average. So this was USO, the ETF for oil, and you can see that back in November, we had the big collapse here. And then we had, this is what we call a cycle low. And again, it's defined and going to tell you probable bottom when we have the alignment of these momentum indicators together. So you can see here was the first one popping up here. We had the reversal first, cycle one, and then we had confirmation with two. So it pops up, goes sideways, and two, momentum confirms up, and then finally breaks to the upside. So that's the cycle low reversal on the USO, just showing you some different examples. And then here's some market bottom analysis that you know, put together for you. So here was looking at the S&P 500 going back. The last major, you know, big bearish trend that we had was back in 2008, 2009. So this is the monthly time frame, which I refer to as the macro. So you can see here just this massive sell-off, right? Came down. Now, you know, a bottom or top, that takes time. You know, a lot of times you don't get the specific V bottom correction up. A lot of times it can go just sideways and then finally make the turn. So this confirms the S&P 500 trend back up, macro trend that shifted. First sign was back here when we had the our indicator, the reversal indicator hit, and that was about 4 or 5 months before we actually had confirmation on cycle 2 going positive that the bottom was in. So if you want to say, call it a bottom, when that happens, that's kind of what I look at. So you can see the steps though. It started to show you the potential bottom starting to develop right here based on the reversal indicator. Then we had momentum 1 right about here, showing you there's, you know, buying coming in. And then we had confirmation with momentum 2 right there. So that's kind of, you know, the kind of cycle steps. And this can take, you know, weeks, if not a couple of months sometimes, to put that you know, specific low in. Now here's where we currently are. So here's S&P SPX on the monthly again. Currently right now, you can see cycle 1 is negative, cycle 2 is also negative. So based on this, to me, I define the macro trend is still down. Now you can see this trend line coming in here. So we could get another move up into this area here, and that could be where we fail. But typically though, what I've seen is that once you start getting the weekly reversal though, that tendency is to lead towards a market starting to bottom. So we're kind of getting into that phase. Now, I don't think we're out of the woods, and I think that, you know, we could retest back down to the prior those June lows. So, you know, in this market, you want to be very selective and be more stock specific and not index specific. So here's the S&P SPY, the COVID low. So you can see down here with these indicator tools, you can see we get the reversal right here. And then we get cycle 1, and then we get confirmation cycle 2, and that was kind of the COVID low bottom, and then off she goes to the, you know, back to the upside. So that's a quick review there, just showing you multiple different examples. And then here's crude oil cycle low back on the weekly. This was had that back massive sell-off in crude, and then finally put in a low back here in February 2009. So right there, see the confirmation. But first we had cycle reversal, momentum, and then cycle 2 momentum confirms to the upside. Now here is, let's take a look where we currently are. I'll pull up the chart here first, but we'll come back to this. So let's take a market review to see where we are currently. Now, all markets and time frames are going to trade in cycles. So even during periods of extreme market uncertainty and volatility, you're going to have these cycles. So they're never going to go straight up or straight down, but we'll cycle in these channels, either up, down, or sideways. Now, the current market macro trend, like I just showed you, is currently down. However, we've had the medium-term daily and the long-term weekly trend has shifted back up. And we're into kind of a reversal to the upside, and now trading into major resistance points or areas. So here's the S&P 500 SPX, and you see we're right about here, about 40, coming in about 41.50. I'll pull up a chart here to show you. 1 second here. So here's QQQ. Now this is a daily, so you can see here the medium term. If you look down here at the bottom, you can see that these momentum indicators, cycle 1 right here and 2, are now above 0, so that's showing you positive momentum. But we're coming into these key areas, this measure move area right here at about 321 and then 328, and the big one would be here. It could even move up higher. But here is SPY, just to look at that real quick. So this next week, we've got some more key data points. We've got the CPI on Wednesday before the market opens, and I think that'll probably come out better. So I would not be surprised to see us move back up towards this next area of resistance, which is going to be about 421 right here. And then, I mean, if it keeps moving, this is going to be where it gets super overstretched, and you should definitely have a mean reversion. So it could push towards that 322. If you look at SPX, that lines up with right here. We're at 41, 41, 45, 50. So we're currently up about 14%. A move into here, that's going to be 42, 30 area. Let's see, that's going to be about 16% right here, and this would be about a 20% move up. So, if we don't start stalling out right in here, I think we're going to probably head towards this 4,200 level right in there. That's the 150 period moving average on the daily, and then the big one is right up here. That's the 200-day. So that's potentially where I see us going. And then we look at the cycles, kind of having what we call a mean reversion, being too overbought. So here I put up my other indicator. You can see here's where we're going to look at price extensions. And if I just align this here to show you, currently we are on SPY up here close to that 3 ATR right there. So this is getting very stretched. We're above 90 percentile overbought. And when you get this yellow line as the moving average of this reversal indicator, when you get that up towards that 90 percentile overbought and the reversal crosses, this has been a very accurate signal for that mean reversion to start to happen. So for example, you can see it right back here. Last time we were this extended. Doesn't mean that we can't go further, but we're getting stretched. Sooner or later, buyers are going to run out of steam, and you're going to see, everybody start taking profit. So, which would then have a mean reversion, then we start all over cycle. Okay, so the last time we had this big one was right here. See right there? That was back in March. So we had this, March rally. This was about a 14% rally there. And then we had it run out of juice. We had the reversal. So that's what we're looking at now. We're very close on all of the different things that you look at. Okay, so that's SPX, just kind of point that out. Next thing I'm always looking for is to kind of be aligned with the seasonal trends of the market. So typically you'll have a seasonality trend to the market. Sometimes they're more defined than others. And here's currently where we are. So this is on the S&P 500 futures E-mini to show you the continuation, what a trend currently on seasonality. So we're currently right here. Okay, so this red line is 5-year average, the black is 15, and the purple down here is 25 years. But you can see here we're currently right here, right about there. So seasonally, this is not the time seasonally to be buying the market. Not to say it can't go up, and it's been going up. But if you look at the seasonality, it tends to bottom out. It tends to kind of keep trending either sideways to down. You can see here over 5-year trend, it was sideways, and then tends to bottom around the 23rd of August. and then has another move back up and tops out again around the 19th midpoint part of September. Has a little bit of sideways action of potential pullback, and then you've got the October potential rally. So typically what you'll see seasonally is markets tend to, I'd say almost 95% of the time, will rally into a seasonal weekend, like, so let's say Labor Day, so typically, like right here towards the end of August, you start getting that seasonal trend back up into Labor Day. Back here in April, we started getting that seasonal trend moving up into Memorial Weekend. So typically, if you look back on your chart, you see the markets tend to trend into long holiday weekends. So that's kind of the other thing that I'm kind of looking for. So, but right now we're in a zone here where the market has a lot of potential to seasonally go back down. Now, the next thing that I use is a scanning process to help select and spot, breakout reversal trades before they happen, before the herd jumps in. So we want to try to get in early, so then let the herd jump in and push the momentum up, and we're then, getting out when they're getting in. So that's kind of, what I kind of always try to look for. So to do this, I've got a scanner that I put together that has the code in it to specifically look for this volatility squeeze pattern that I just showed you. And here's a current example. This is on Thinkorswim. This I just pulled up to look for, okay, everything. This is the S&P 100 stocks. Okay, I'll show you this in a minute. But so I did a scan, and that SQD means squeeze daily. So I did a scan to see what is on the S&P 100 stocks, what is in a squeeze on the daily. Okay, so there's a daily squeeze. Now this is a trigger. So once it does break out of the squeeze, I can see how long it stays out. Here's a 4-hour squeeze, a 2-day squeeze, weekly squeeze. So I can look at all the different time frames that I want. Now, currently we've got these are in a very tight squeeze. The one that, and we actually just did this one Friday. This was on JP Morgan. Okay, so JP Morgan has been in a squeeze for 20 bars or 20 days. And the momentum is green, color coded, so that shows momentum up. If it's red, it shows momentum down. Now, JP Morgan also has a 4-hour squeeze. It's been in for 13 bars, and also has a 2-day squeeze. So it has a good probability for a directional break to the upside. No guarantee, but everything's that trading is a business of probability. So you want to try to select the best probability. And this is saying there's a good probability for a move up. So let me pull up that scanner and I'll show you real quick, and we can flip through a few of these. So this is one that we noticed on Friday, and we did the trade. I'll show you the trade here. So we'll keep our fingers crossed on that. If I can get the scanner up here for you. So I'm going to put this over on JP Morgan to show you what it looks like. And I typically like to use always use multiple time frames, but the 2 time frames here I'm going to show you, they're really nice, is this will be the daily over here on the left. And then I'm going to put the 4-hour here as another time frame that also has a volatility squeeze on the 4-hour. So you can see the squeeze here very tight, right? Very, very tight pattern. Now we've already had earnings, which is something else I like. So earnings are gone, that's done. Now potential right now is, this could break down, but the momentum is showing us the potential for this to probable direction to be up. And we've also, the other thing I like to look at, where is it within the long-term cycle trend? So I look and align that with my weekly right here. So a couple of different points then is that if I look at my long-term weekly chart, I can see that JP Morgan has had a cycle reversal right here. So it's chopping back and forth, but now it's had a pretty clear define reversal there. Now, it still could break lower, but I'm taking the shot that it's going to break to the upside, and could be wrong. But that's kind of what I'm looking for. And here's the scanner right here, and we can flip through a few of the other ones here as well. So here is when I click on this right there, it'll pull up everything on this S&P 100 list that's in a squeeze. So JP Morgan, here are a few others I'll pull up for you. Let me get rid of these fib levels real quick here. See how tight that pattern is? So the next thing is, okay, well, which way is it going to go? Is it going to break up or is it going to break down? So I'm looking at potential probability to break up. The longer term trend, the weekly trends on the S&P and the NASDAQ are currently up. So that's also headed and following the general longer term, medium term trend. So it needs to get through these key moving averages, but there's potential there. Now here's another. Here I'm going to flip through a few others here. I'll put this scanner right here so you can see when we flip through. Well, here is another one that's showing in the squeeze. This is AIG, but it's got earnings coming up. So typically you'll have a squeeze into earnings, and then the earnings will be the catalyst for this moving up or down. But you can see that was a squeeze going on there. And here is Bank of New York. This looks actually really good. I'm going to write that down. That might be a trade setup for next week. So these banks are starting to show a little bit of potential. So that's Bank of New York. Very nice volatility squeeze. And let me see here. Let me put it on the other time frame here. Oh, also, yeah, this is great. So this is kind of the combination I like, is when we have multiple squeezes, the daily, 4 hour and more. So here you can see Bank of New York, pretty decent. JP Morgan looks better, tighter, but that also looks pretty decent. Here's JP Morgan. I just showed you that one. Here is Abbott Labs. Now this one has potential to, not really define which way, potential actually to go down. See momentum, cycle 1 and 2 are negative. So this one is just in a squeeze pattern, not given any, kind of defined direction quite yet, but one that you can watch. Here's another one that's in a squeeze. Here's Amgen. And again, you can see here, Amgen is not looking too good. It's got potential here. Momentum is down. This could actually break to the downside, but the squeeze is not triggered. So it can just churn here for another few days or even a week. So just to show you the pattern. And here's another one. Here's Procter and Gamble. This one looks pretty good actually here. Procter and Gamble, you can see here that a squeeze triggered up, went back into the squeeze. So this has potential. You can see there are a lot of overhead resistance, but then we look at the weekly time frame here on Procter and Gamble real quick. So the weekly cycle trend has shifted back up. So that might be one to look at. Here is Biogen. Here is another one. Here's Visa. And here's another one, J&J. J&J is really sloppy, just starting to squeeze. But the best looking one so far is going to be the JP Morgan. Now, here's the other thing. So I can put this now to, let's say I want to go look at the NASDAQ 100. So I'll just go, this is think or swim. I'll just go over here, public. And I'll come over here. Let's take a look at the NASDAQ 100. So here's everything in a squeeze, daily squeeze on the NASDAQ 100 stocks. So let's take a look at a few of these. So here is JD. Not a bad squeeze. Here's CrowdStrike. Here's one that looks kind of interesting. This is coming up into earnings. Okata, this might be one to follow after earnings. This thing is really tight and coiled. So just a bunch of different ones there. And And then I have my own custom list, and I'll put that up, and then you can just follow your own things that you like to look at. So here I'll put in my custom list, and here's everything that's popping up on my custom list. So again, JP Morgan, Dollar General, Crowd, Abbott, OKTA, Chewy, DDoc, Visa, et cetera, et cetera. So it just gives you a lot of things to be looking for to kind of, filter out and be more trade selective. So that's kind of a look there. And here's an example of a breakout reversal trade alert that was sent out. And so I have a alert system or service. And with this service, this is basically what I do. I look for these specific stocks, and I just kind of this process I use what I use to find the trades. And here's one that we did not just recently. This was on UNG. This was a really great one. But first, here's the summary of results. So started the first service back in May 2018. These were breakout trades, and since then I've added 3 other different alert services. But currently, all the alert services together, cumulatively, from back in May of 2018 to current present, we've had really good success. We've had a total of 488 trades closed out, 378 of those winners, 16 break even, 94 losers. So really high winning percentage of these trades. Now these are unaudited, but these are the trade results. Just keeping track of those, like when they're done. So that's kind of a current little guide for you there. And then here's one that we did just recently. This was on UNG, natural gas. So we set this one up on the 11th of July when it was trading at 21.87, and then had multiple profit exits, but on the 26th was exited the full amount of the trade out at 30.87. So you can see a huge move to the upside. So when we took the trade off, it was up $485 per spread, or 173% return. So here's what that looks like when you get the alert here. This was the alert entry. So it says new UNG long trading at 21.87, cycle low, daily reversal. Okay, so then it tells you what to do. Buy a diagonal, the 12 August, 15 July, 21.5, 24 call at around $1.95. And so summary is right here. Long the 12 August, 21.5, short the 5 July, 24. Okay, so it's spread there using what we call a calendar diagonal. And then here was the last profit take alert sent out. This was back on the 26th. It says, take profit UNG trading at around 30.70, getting extended here on the daily time frame. Okay, so it's getting too stretched. So take profit on any long balance you have. So the spread was up at that time over $500 per spread. And let's take a look. So it got extended, so I said get out. And we milked this for a couple of weeks. So here it was, the entry right here based on the model, the trading model. And so again, we had a big sell-off on UNG, came down. This is a retracement support here. This is key moving average support here, came down and held that support, then gave us momentum shifting up, cycle reversal, and so we got in right there on the 11th. Traded sideways for about 3 days and then broke out. Now we held this trade, doing different adjustments to stay with it, and it got out right there. And that was because huge price extension. I'll show you that real quick using the extension indicator. And this is kind of the basis of getting out and why I sent that alert to close out the balance. Here's what that looks like. So here's where we got in, right here on the 11th, right there, okay? And then see how extended it got? Man, that just ripped through the 3 ATR. When I saw that, get out, and sure enough, look at that. 2 days later, cycle reversal here, and it's pulled back. Not a huge pullback, but pulled back. So we almost timed it. Well, actually, we did time it perfectly. So that was UNG. So just give you a trade example there. Here's I'll show you the trade that we did on JP Morgan. Let me pull that up here, and then I'll take whatever questions. Hold on a second. Get rid of this. So this was the alert trade sent out from JP Morgan, and we're still in the squeeze, so it hasn't triggered, but probability is good that it will. Let me pull that up 1 second. Just put the chart up so you can kind of see. And here's the trade that we did here was, let me get the right one. So we did this trade here. So sent out this alert trade. And the reason that I sent out, this is another part of the alert service, to what I do is line up what option spread to use based on the market pattern that we're looking at. Now, this could stay in this sideways churning, kind of coiling price action for a number more days. You can see it's already been coiling sideways. You can see this has been in a sideways pattern here basically since back to when it sold off here. It's been a really tight pattern for going into the third month. Okay, so it could continue coiling here, it maybe go down, but what we did was a call calendar diagonal to take advantage of it. Does churn sideways, we're going to get paid while we wait. So it's got a positive theta here of $4.17. So we did this trade here along the 9th September 116, called in short against it 12 August 119 at 315. Now if we get a move here to our target next week of that 119, if it moves there, this will be up $190. But what we will probably do is, if it breaks to the upside, we'll probably adjust this and roll the trade up and try to trade it higher. So that's an example there. All right, so just kind of wanted to show you all that. And here's that UNG trade. We end up getting out on the 26th. It was trading at 30.88. So this was really a fun trade too. So we went, we had adjusted price of 280, and now it was, blew up when it spiked up. So it was up over $485 there, under 73% return. And this was a very low risk trade. So the trades that I send out are very low defined risk trades. So if you'd like to learn more on how to capitalize on these kind of trading directional market cycles, here's what you can do now. I'm going to be doing a really fantastic course with all my indicators and tools that you'll get. And this will be next Saturday, the 13th of August, 11 a.m. Eastern to 2 p.m. Eastern, or however time it takes, tend to go over. And then we'll finish up on Monday at 5 p.m. Eastern to 7. So if you'd like to join us, and I highly recommend this course, because if you're not using trading indicators and tools, this will be one place where you can get everything at this one price of $497. I've got a number of different packages too that I think will give you a lot of flexibility as to what you want. So let me give you the link, and then we'll take you through everything. So first off, here's everything you're going to get, and here's the price link for this package, what I call package 1. And so this is, to describe this is where you're going to get all my trading tools, all 8 of my indicators that I've developed, and plus the course, plus the bonuses. And so these are your tools forever. There's no additional fees or anything once you have them. And so use that link there. So this is package 1, $497. With this, you get all my tools. You get the core model, the dynamic directional trading model. If you go to my website, these are the prices on the website. Then you're going to get that volatility scanner that I showed you. So it's $397 on my website. You're going to get my multi-time frame squeeze momentum alert indicator. You're going to get my MoFlow signal trigger, my cycle reversal indicator, extreme range band. These are all the indicators I use. And the course will then go through and tell you and teach you how these indicators you use, how you set them up. And then you'll get my opening range high-low breakout indicator. Now, as an additional for setting your targets for, price targets in defense, I'm giving you my Fibonacci price target mapping course that I did this February. So you'll get that, and that's a nice bonus course there for you. And then you're going to get my other indicator that I use, what we call the moving average cross signal indicator. So really cool indicator there. You're going to get that. And then you'll get 30-day trial membership to the Power Cycle Trading Club. And you can start that whenever you want. If you want to hold off till after the course, you can. Then we'll do a follow-up Q&A, and then you're going to get my All About Futures 31-page futures trading tutorial. And then you'll get my cycle tutorial on the trading model, 67 pages plus videos. So really great package there, $497. And let me make sure that that link is working. And yeah, it looks good. So here's the link there. If you click that, you can get everything. We'll send you all the indicators and the instructions on how to use those. So that's package 1, $497. Now, if maybe you already have an indicator that I have, or maybe you'd like to just you don't need all the 8, and if you want to join us for $197, I've got this package, which is, in this one you get all the bonuses, but you get a choice of just one indicator. So the choice, you won't get the choice will be not the core model, but you can have a choice of any of the other indicators. So you can get the multi-time frame, the volatility scanner, the cycle reversal, extreme range opening, whatever. Now, again, if you want, you can wait until the course and then select your indicator, or you can send us an email and I can give you more, ideas on those indicators. But you have flexibility there. So you get a choice of one indicator, but then you're going to get the other bonuses. You're going to get that Fibonacci course, moving average cross indicator, 30-day trial membership, futures guide, and the manual on the trading system. So all that for $197. So let me give you the link for that one. So I was just trying to make sure I covered all the different possibilities for you. And here's the link on that one. It's powercycletrading.com/DIR1. So use this link here. Sorry, that's not the right one. Use this link here. There it is. powercycletrading.com/1, and that'll pull up that payment link. $197. So you get a choice of one indicator plus all the bonuses. Now, if you'd like to have your alert service that I have with this package, I've got that course package for you next, and then take whatever questions you have. So the next package would be well, let me go through the indicator software you'll get. So I'll just go flip through this pretty quick because there's a lot of tools here, and the course is all about the tools, okay, and how to use them, all that good stuff. So you're going to get my indicator 1, the dynamic directional trading model. This would be if you do course package 1, or if you do it with the alert service course package 3. So it's a 5 study set trading model system that I put together, back in 2009, 2010. I've got it available for Thinkorswim, TradeStation, TradingView, Ninja Trader 7 and 8, and eSignal. So you'll get that. You can have any of these platforms or all of them. So you'll get that, and then you'll get my indicator 2, the PCD momentum flow signal trigger. This actually gives you the arrows when momentum shifts up or down. So I've got this only available for Thinkorswim. So you'll get my indicator 3, my multi-time frame squeeze momentum alert. So this is you'll get this for package 1 or 3, or it could be one of your choices. So this is a really great tool that I like to use to signal, so I can look at one chart and see the momentum shifts. So here's what that looks like down below. I'll show you an example for JP Morgan. So I can flip through and analyze stocks quickly with this additional indicator to see what other time frames are showing positive momentum. And so it gives you that multiple time frames of momentum. So you can see the JP Morgan going into the close momentum started shifting off. See, And so it just kind of started stalling. But you can see the row below it shows you every time frame that's in a squeeze. So here you can see JP Morgan has multiple squeezes. It's got a 3-minute squeeze, 4-minute, 5-minute. It's got a 20-minute squeeze, 4-hour squeeze, and a daily squeeze. So it just gives you all that information, right there where you don't have to flip to different charts. So that's the multi-squeeze indicator. So you'll get that. Okay, so that's what you'll get there. So I have it for Thinkorswim or TradeStation. Then you'll get indicator 4, cycle reversal indicator. This is what we use to spot the cycle changes. This is one of my most accurate indicators. It's just so good for picking price momentum shifts, cycle shifts up or down. And it's a 2-study system, part of the system, and it shows you when it crosses, that's the alert to a potential, what I call cycle change. And this is a forward-looking indicator, so it's not something that's lagging. So you'll get that, Thinkorswim, TradeStation, Trading View. You'll get my indicator 5, that's exchange range band. This is where we see if markets are too stretched up or down. So you'll get that, or that could be a choice, one of your indicators. You'll get my indicator 6 is what the opening range high-low breakout indicator. So this sets an opening range, and then we can trade based on that opening range. So it's an indicator that lays that out. And then 7 is the squeeze volatility scanner. So you'll get that as well. So all of that for those 2 different prices. Now, if you want the package with my alert service, which has really been a great service, where I'm pretty much doing all the heavy lifting, selecting the trades, but this course basically designed around how I pick those trades and what I'm looking for. So use this indicator, use this link here, and this will give you the package 3. And this is the alert service, all 4 services for 6 months, plus everything in course package run, all the indicators, all the bonuses, etc. So this is, if you want to do this one, it's a $1,197. There's a 2-pay if you'd like, but this will give you everything plus my alert services for 4 services for 6 months. So if you've been looking for more help and guidance in your trading, this is a great package. If you're not able to, watch the screen all day and look at everything, this is highly recommended. So with this, you'll get all 4 of my alert services for 6 months, and you can start it whenever you want and stop it. You can pause it, if you go on a vacation and then start back. Plus, with this, you get 6 months to my trading club, which gives you a virtual trading room every day and a lot of other good benefits that I'll show you. So then also everything in course package 1, all indicators and bonuses. So with this, you'll get my breakout reversal trades setups that I send out, or butterfly long condor trades that I send out, counter diagonal trades, or earnings option trades that I send out. Here's course package 3, okay? And so course package 3 is this. So this is what you're gonna get with that link right there. And you won't find a better price probably of any service, or I don't know what other people offer their alert services for, but I guarantee they're probably not anywhere close to this. So you're going to get this for 6 months, the alerts, 6 months to the trading club as part of the bonus. And if you want to do it with course package 1, that's the link that I just put in there. That's $1,197. If you want to do it with course package 2, where you get a choice of an indicator, you can do that as well. So that's $897, and all it is just taking package 2, which is your choice of one indicator, plus giving you the alert service for 6 months. So let me give you that link, and then that pretty much covers everything. And then I can take questions, and whatever trades or anything we want to look at, we can do that as well. So here is the link for that if you'd like to take that one right there and double check that. And this also has a 2-pay if you like it. So this will give you everything, all 4 services plus all the bonuses and choice of one indicator. Okay, so that's that. So basically, you're getting with the alert service a lot of great stuff here. First off, you're getting all 4 of my alert services here. So, every week there might be different trades that I send out. So there, or you might get one of every one possibly. So you'll get any breakout reversal trades that I send out. You'll get any counter diagonals. That was the one we did at JP Morgan. Any butterflies or long condors that I send out, and any trades on earnings that I send out. So you'll get that for the next 6 months, plus the trading club for 6 months, which when I send out a alert, you'll get a trading guide for each trade. You'll get a trade setup video. Trades are listed and archived. So then with the trading club for 6 months, you get access to my virtual trading room for each day during the week that I'm in, 6 months. You get my video market newsletter every day after the close. I go over the markets, what I'm looking at, kind of the outlook. We'll get that for 6 months. Virtual trading room, coaching room for 6 months, and 60% discounts on any software or anything on my website. But you're going to get pretty much getting everything, all my tools here for this one price within these packages. So that's the Elite Open and Close. Here's the results there again for you. And here's what you're gonna, what I'm gonna cover in the course. Is a very extensive course because I want to make sure that you understand how to use the model, and then you'll have the Q&A, and you can access the trading room every day for the next 30 days or 6 months to come in and ask questions. So we'll start off the course next Saturday going through the core model, the 5-step trading profits formula kind of that I outlined earlier, going through the trading model, the momentum indicators, all that good stuff, using momentum flows, how that is done for price direction, trend strength, how to do that. And then this indicator here is such a good one, the cycle reversal and extreme range band indicator with momentum, how that's used to show us cycle reversals up or down, picking those exact points of entry. How the moving average cross Fibonacci ratio indicator is used. This is a really good moving average cross indicator based on Fibonacci. You'll get that. We'll go through how that's used. That multi-time frame squeeze indicator, I just showed you how that's used. How to identify the different time frames we want to use for the trades. So also then setting price targets using that Fibonacci price target mapping. You get that as a bonus as well, but we'll go through that in the course too. Moving averages, how those are used for these breakouts and tracking trend. Best trading timeframes for your short duration swing trades. Going through the 5 winning probability chart patterns in more detail for the course to show you how to select the ones for the specific trades. Also, any that include that volatility squeeze. Step-by-step process for trading a volatility squeeze using the opening range indicator. 5-step price entry rules. These are very defined rules. I've got 5 specific steps for a trade entry. Okay, so those are gone through, and you'll get a handout on that as well. So these are 5-step entry rules for using the trading model, reversal indicators, etc. Profit take rules, exit risk management. Part 2, we go through all the different setups based on these 5 chart patterns, a lot more examples of those. And then, how to uncover the next big winners. So we'll go through the scanning process, how you use those to scan and select for trades, and make your watch list and resource and a good trading library. So very, very extensive course. And here's a little feedback from, prior course here. This is from Pam. She's been a long time member. I was trying to see if she's here, but she said, sent me this email back some time ago telling me about the system. She said, I've literally lost thousands of dollars on other systems, but I settled on Larry's. His technical knowledge is unsurpassed, in my opinion, and his knowledge of using strategies with low risk, high reward are the best I've found since I started trading in 2003. And this was from Bruce. He said, Larry's experience in custom tools provide one of the best, if not best, method for identifying, entering, and managing trades. The follow-up Q&As and the trading room reviews using these methods on current identified trades cement the understanding and confidence in using the PCT cycle trading model method. And then from Ronald, the biggest improvement to my trading has been the addition of the PCT momentum cycle 1 and 2 indicators, which I kind of went over earlier with you. So a little bit of feedback there. Now, here are your bonuses that you'll get. So you're going to get my bonus one is my price target mapping course that I did back in February. That's going to be 1 year bonuses. And so this is a 3-hour course, 39 page training manual. So it goes through how I set price targets using this process, which goes through Fibonacci, moving averages, price action support, standard deviation, unusual option activity. Fantastic course there you get as a bonus. Then you'll get bonus 2, my moving average Fibonacci ratio cross. So this is a moving average cross based on momentum and Fibonacci price points. It's got an upper lower study that shows you the arrows when you get a reversal up or down using this cross. So you'll get that. Bonus 3, you'll get a membership to the club. If you do, package 1 or 2, you get 1 month. If you do package, with the alert service, you get that for 6 months. So with the trading club membership, you get access to my virtual trading room, which is open from 9:30 a.m. to 10:30 Eastern every Monday through Friday. So I'm in there hosting any questions you have, anything we're setting up, I go through. Then you'll get my updated video newsletter every day after the close. These are archived. Then will have access to my weekly Q&As, Traders Education Vault, good trading educational material for all members, and 60% discounts off anything on my website, courses or software. But you're going to get all the software, so you won't need that. Best trading service ever. Been enjoying the daily sessions and making money to increase my retirement account. Seriously consider joining Larry's truly rewarding educational that has really benefit David. Thank you. Bonus 4, we'll do a follow-up Q&A probably the next day, Tuesday. So this will also be live and recorded. So come in the next day, ask questions. And then also remember, you get the access to the virtual trading room for 30 days or 6 months if you do the alert service. Bonus 5, all about futures. It's a 31-page futures trading tutorial that you'll get as a bonus, telling you all about futures contracts, how they work. And then my Parasite Directional Trading Model tutorial, get that as well. So a really great combination of great bonuses. Here's a review of the alert service. So this was from Waleed, who's one of my members, lives out in Kuwait. He says, Larry, I have to mention one thing. I'm subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing that I'd like people on this webinar to know is that when I get a trade alert from Larry, I do it blindly as time to show me that this man is that accurate in his recommendations. Thanks, Waleed. And this is from Scott, who might be here today. He's been a good member a long time now. He said, after 20 years of trading, I found Larry to be the best trainer coach in the business. I joined for a year and paid for my annual fee within 2 weeks, and that was doing small trades. It'll be the best investment that you will ever make. Go with the elite package, great group of traders in the trading club as well. So again, just to review here, this is everything you'll get. You'll get the package 1 if you want all the indicators, 1,197, and it's got 2Pay if you want to use that. And here's that link here. Use this link if you'd like package 3. And then package 2, package, I guess you would say 4 would be you get everything in package 2, a choice of indicator plus the alert service. And that will be paracycletrading.com/plush DIR1. Okay, so that's how you can use that link there. Okay, so that pretty much covers it. So you'll get for 6 months, and 6 months of the trading club, my earnings alerts, breakout alerts, calendars, calendar diagonals, and butterflies. So when I send out alert, some members just do their own thing, but I'll always give you a suggested option trade based on that market pattern or what I'm seeing. So you get the suggested option trade, entry price levels, price targets based on unusual option activity, what option series to use, stop loss levels, guidelines. Here's a look real quick at the one that was sent out on JP Morgan on Friday. I use a service called Telegram, and it is super fast. You will get this within seconds of when I send it out. So this is what it looks like. And you can see here, right here, it says new JP Morgan long trading around 115.70. Daily volatility squeeze plus cycle low, weekly reversal by diagonal. 9 September, 12 August, 116, 119 call around 320. Summary, long the 9 September 116 call, short the 12 August 119. And then if I have any alerts that I send out on adjustments or what to do, you'll get all that. So that's kind of what it looks like. They go out super fast. And so you get set up there, and how to use the option series that you need to use. These trade setups are, then you get a video review of that. So you'll get my newsletter daily after the market close, a video newsletter. Get that, my weekly trading Q&As for the next 6 months, and the virtual trading room for the next 6 months, again, open from 9:30 to 10:30, and discounts of 60% off anything on my website. So here's a kind of review, just real quick, calendar diagonal. The last one sent out, well, we've sent out a couple other ones lately we're still in, but here's the UNG trade. I showed you that one earlier. And this one was a super big home run. Here's butterfly long condors trades. Here's one that we did recently. This was back in April. This one was a killer. And that, basically did this using a butterfly on a breakdown here, and did this for a low risk, $165 of risk, and ended up over $427 profit on that risk of 165. So about 259% return on that. And then here's an example of a breakout trade. This is using here's an example of a put debit spread that we did on QQQ. So it's breaking down here. So did this with a breakout trade of put debit spread. So ended up making 346, 124% return on that. And here's an example of an earnings trade. This is what we call a double calendar. This was on T-Mobile. This is an example of this is selling volatility, very low risk trades. For this one, we did this as a double calendar just to sell volatility. Ended up making this one with $130 per spread on the risk of $124 of risk, max risk, and ended up, $130 profit, so 105% return on that. So I'm out of breath. That's it. So any questions or anything? All right, let's take a look here. Anything that you want to look at, be happy to do that.